Welcome back. It's time now to take a look at the top business stories. DFM's revenue to rise by 17% this year, according to Global Investment House. DP World records $500 million pre-tax profit for 2010. And Japan's stocks fall. Let's look at the equity markets first. The UAE bourses ended mixed today. Dubai's DFM General Index rose 0.6% to close at 1,529 points. Arab Tech Holding gained 2.6%. Emaar Properties rose 1.3%. Aramex fell 0.6%. DP World fell 0.3%. And Du gained 0.3%. 156 million shares were traded, valued at 241 million dirhams. The ADX fell marginally by 0.04% to close the session at 2,629 points, although only one sector, the banking sector, posted losses. Abu Dhabi Commercial Bank fell at 2.1%. First Gulf Bank dropped 0.3%. Bank of Sharjah lost 0.6%. Worst performer among the listed banks, though, was National Bank of Al Quwain, which fell 9.2%. The real estate sector was today's strongest. Alda Properties rose 4.2% and Sura Real Estate gained 5.3%. 230 million shares were traded, valued at 226 million dirhams. And now let's look at the GCC markets, which ended mixed today. Take a close look at the Egypt stock market. Today was the first day in 7 weeks. Egypt's benchmark index closed down 9%. And now to our top stories. The Dubai financial markets revenue is forecast to rise by 17% this year, according to a report released by Global Investment House. The Kuwait-based company forecasts the stock operator's income to rise to 223 million dirhams, up from nearly 190 million in 2010. Main reason is the pickup in trading activity due to the economic recovery. As trading commissions currently account for more than 80% of DFM's revenues, the company is working on diversifying its income. According to Essa Kasim, managing director and CEO of DFM, the bourse operator is shifting its focus further towards market data sales. Port operator DP World earned more than $500 million in pre-tax profits in 2010 and expects further progress this year. Net profit rose by 35% to $450 million, while shipping volumes rose 14% last year. The CEO of DP World, Mohammed Sharaf, said the results reflect the growth in global container shipping, plus the results benefited from the company's cost-cutting measures and improved terminal efficiencies implemented since the downturn. A law allowing foreigners 100% ownership of UAE-based companies could be introduced by the end of this year. That's according to the Minister of Economy, Sultan bin Zayed Al Mansouri. Currently, only nationals are allowed full ownership of companies outside free zones. According to a local newspaper, the minister said that he expects a large increase of foreign direct investments into the UAE. The new ownership regulation could boost that amount. He added that in the next 2 years, the Emirate plans to increase trade with Europe, especially with Germany. And in our fast financial news, Abu Dhabi Airport reported an 8% rise in passenger numbers in February compared to the same period last year. The airport welcomed 870,000 passengers last month. 9,000 planes came through the capital. According to statistics by the airport operator, Bangkok, London, Doha, Manila and Frankfurt were the top 5 destinations last month. Etisalat shareholders have asked the company's board of directors to renegotiate with the federal government to reduce its royalty fees. Additionally, the telecoms operator proposed a dividend of 35 fils per share, bringing the total dividends for the year to 60 fils. Also, rating agency Moody's confirmed Etisalat's long-term rating at AA3. The Royal Bank of Scotland expects 2 to 4 Gulf IPOs in London this year, mainly coming from the UAE and Qatar. It also sees between 7 and 10 mandates for bond issuances in the MENA region. IPO activity in the Gulf came to a standstill after the global financial downturn. However, there have been signs of a pickup in recent weeks. And after the break, we'll run you through what's making the headlines in international business today.